Good morning. This is Larry McMillan with a stock market update on Tuesday, August 6th. So I waited an extra day to do the update this week because of the wild volatility in the market. And it still hasn't really settled down much, but at least today we're going up instead of down. So the breakdown in S&P last week was pretty severe, and it did accelerate to the downside to the point where it went through all the modified Bollinger Bands that we use as support indicators. So that did close out the McMillan Volatility Band sell signal from the week before and potentially sets up a buy signal, but that is not in place yet. There are a couple of gaps now on the S&P chart. Those will probably act as some resistance. One's just above 5,300. The other's just above 5,400. I know that seems like a long ways from where we were, but the market is moving fast now. It's up really 200 points from yesterday morning's lows. The equity-only put-call ratios remain solidly on sell signals. They've been on sell signals for a couple of weeks now. Breadth was pretty bad in this decline, and so the stocks-only breadth oscillator is in deeply oversold territory, but that won't generate a confirmed buy signal for a couple of days at best. However, the New York Stock Exchange breadth oscillator is in much better shape. Several of the types of things that trade on the New York Stock Exchange in heavy quantities, such as ETFs representing interest rates or utilities, healthcare, that sort of thing, those things have been doing better than the broad market. So the breadth on the New York Stock Exchange has been better than overall breadth in the market as a whole. The new highs versus new lows indicator, yesterday for the first time we did have more new lows than new highs on the New York Stock Exchange. Not last week. It was positive, more new highs all the way through the week, but again, yesterday it was more new lows. So if there's more new lows again today, that would stop out that long-lasting buy signal that we had from there. Of course, we'd rolled the options up on that, so our delta in that position is really very small. Realized volatility is still on a sell signal. Realized volatility is exploding, of course, with market moves like this. And when realized volatility is going up, that's generally bad for stocks. Implied volatility, VIX, also exploded to the upside yesterday, reaching over 69 at the peak. That's a little ridiculous. But in any case, it pulled way back from there. So that has generated a confirmed buy signal. That's the first buy signal that we actually have that's been confirmed on this recent activity. The trend of VIX, however, is very negative. That means that VIX is trending higher. So overall, that's a negative for stocks as well. And finally, in a more severe bearish situation, although it's taming down some today, the construct of volatile derivatives gave sell signals. In other words, the term structure on the futures inverted. The front month futures traded above the price of the second month futures. These are generally pretty bad things for the stock market. And while it could be corrected and just go away in the short term, we did see in past severe corrections, February of 2018, February of 2020, that led to much more severe market downside. So this market is definitely not out of the woods. Today's rally helps a lot, and we'll see if some of these other indicators can roll over to buy signals. But for right now, we had sell signals in place over the last couple of weeks, and so we rolled those positions down, taking partial profits on those things, but we're still holding them. And going forward, we'll trade any new confirmed signals that do exist. We are going to be having a webinar this Thursday night to discuss the indicators individually. If you're interested, visit our website. And meanwhile, have a great week trading. Hope you survive the week trading.